Good evening. On 22nd of August, today we are trying to take a view on rupee. This is technically, so we will not speak about current account deficits and so on. We will just take the view technically, and we'll try to see the two phases of rupee depreciation. Both of the phases were being preceded by the consolidation phase, and herein lies the beauty of the geometry, if you say, or if how prices actually get depreciated before we are trying to look how price get depreciated and what happens before the depreciation. So the first theory is that means the key takeaway of this video is before depreciation in the phase 1 and the phase 2 there is a consolidation. So this is a consolidation that is starting from June 2010 to August 2011, and prices have been consolidating in exactly the same ways in which the prices have been consolidating in the phase 2 of July 2012 to May 2013. So what happened after consolidation? The trigger point came, and here the trigger was in August 2011, where sovereign rating agencies have been downgraded a notch by the rating agencies S&P, and rather than the depreciation of the dollar, it actually happened that the rupee got depreciated from the levels of 44 to 54, and if you take this as well into account, to the levels of 57. Here what happened was the trigger point was on May 22nd. Mr. Bain Bernanke, the Federal Reserve Governor, hinted at the tapering. Tapering means gradual unwinding of quantitative easing of the money they have been printing around for the Q1, QE2 and QE3 things. And so when this tapering was even talked about, people started taking out money from the emerging markets, and India was also the victim. And since the high CAD countries actually got South Africa is also in the line, so South African currency is also depreciating in the same vein as Indian currency has been depreciating. So the trigger point was the tapering talk done by Mr. Ben Bernanke on May 22nd, and rupee depreciated somewhere around 20% from the region of 55 to 65, and from same here it depreciated from the region of 44 to 54, and that was the. So what we are now talking about is this beautiful geometry that we are seeing in the last 2 years, and so what happens next? Now we can suppose that this yellow, what you're saying, is an appreciation of a rupee for a brief period of 1.5 months. Same can follow here. This is the theory one, that rupee can appreciate from the levels of 65 to the regions of 60, where many economists are saying is the real level of the rupee, and so after that it can continue its march towards the region of 70. This is the theory one, which we are looking that the fall in the rupee has been arrested, although the tapering in the September meeting looks imminent. But again, you can never actually preempt the Fed. Neither one should try doing it. So the theory one says that either we are looking for this particular kind of movement in the rupee, that rupee keeps on appreciating, and so the market can move up and rupee can come down to the level of 60. The theory two suggests that rupee will actually come down into the consolidation phases like phase 1 and phase 2, and so for an extended period rupee can move from 65 to 60 and nothing much will happen to the markets, and so the rupee can consolidate for 6 months to 1 year. That means from August 2013 till somewhere around May July 2014, and rupee can come down to the level of 65 to 60 and then can got depreciated from 60 to 70 in the phase 3. We are looking with this. So the theory 1 or the game plan 1 is going to be a steep appreciation of rupee, and so the steep appreciation of the market moving up, which we are putting around 60 to 70% of the probability, and we are looking forward to this particular thing to happen. Or it can go for a year-long consolidation and then can depreciate from there. There may be a flight changes that the rupee can go to a much smaller, to much depreciated level of 60 to 66 and a half, but not much from there, as some other investment banker has really proposed the level of 70. We at the House of Amca Financials doesn't see 70 coming back soon. Before that happen, either this will happen or the consolidation, which is a longish, which is like much more drawn up in the time scale, will happen, and then probably rupee can go to much depreciated levels of 70. This also fits in our theory that we are giving on gold and other thing, that it will taper off or it will not taper off. That if Fed decides not to taper in September and to taper probably in somewhere around first quarter of 2014, what we will see is a steep appreciation of the rupee, and then we can have a follow-up depreciation from there. If Fed decides really, and if Fed doesn't decide anything and keep everything in limbo, probably we are looking at a consolidation which is much longer in time frame. So this is kind of an analysis where we are not taking any view on CAD, any view on the foreign fund flows or FDI, but simple looking into the technical picture. We are trying to take a view from the prices, as somebody rightly said, that price is worth 1,000 words. We will take it this analysis further as and when required. As of now, our worst case scenario seems to end at around 66 or 66.5. We actually feel that the worst case scenario has been done today at around 22nd of August. But then this has to be taken with a pinch of salt. Thank you. Have a good time with rupee probably in the coming times. Thank you very much.